This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, December 10th, 2014. Euro dollar. So the euro has managed to mount a bit of a recovery out from the recent 2014 low this week, with the gains now reaching all the way up to the 124.50 area ahead of this latest minor pullback. But the recovery really is nothing that would jeopardize the current longer-term downtrend, with the market still well capped below the 50-day moving average and looking for fresh setbacks. Ultimately, a break back below the recent low at 122.47 would open the door for the next downside extension towards the 2012 base at 2040, while only a close back above the 50-day moving average would compromise the current bearish outlook. Sterling dollar. So cable continues to consolidate just off its recent 2014 low at 55.41, and the market is expected to continue to trade with a heavy tone while it remains locked within this broader underlying downtrend. Ultimately, a break back above 158.26 would be required to take the immediate pressure off the downside, while inability to do so will leave the market thinking about a fresh downside extension below 155.41 and towards 153.50 further down. Dollar yen. Dollar yen is finally seeing a nice little pullback after establishing fresh 7-year highs at 121.85 back on Monday. The market is now flirting with the 10-day moving average, a moving average that it has failed to close below since mid-October, and a close below the 10-day moving average on Wednesday would confirm the onset of a potential correction and open deeper setbacks where the market will eventually look to form a higher low and look for a bullish resumption. But again, the 10-day moving average currently comes in at 119.45, and a close below would open some weakness in dollar yen. Inability to close below that 10-day moving average will keep the immediate pressure on the top side and open the door for fresh upside, or more immediate fresh upside. Euro Swiss. Euro Swiss continues to hover just over the 120 critical psychological barrier after basing out at 120.09 back on the 19th of October. The market will need to establish back above a previous base from September at 2045 to take the immediate pressure off the downside, while inability to do so will keep the market focused on a potential retest of that 120 barrier. Aussie dollar. Aussie dollar has broken down to fresh 2014 lows on Tuesday, with the market trading down to 82.24 ahead of this latest minor bounce. A bullish doji close on Tuesday could suggest that the market is poised for a bit of a correction higher before it looks to resume the downtrend, but overall the downtrend remains firmly intact, and any rally should continue to be very well capped ahead of 85.50 in favor of fresh weakness, eventually down towards the next critical psychological barrier at 80. Dollar CAD. Dollar CAD has recently broken to fresh 2014 highs, piercing above 115 ahead of this latest minor pullback. But again, the structure remains highly constructive, with the market looking to break back above the high at 115 and towards a measured move objective at 117.50 further up. Ultimately, only back below 113.13 would compromise the current bullish outlook. Kiwi dollar. Kiwi has recently broken down to fresh 2014 lows, with the market trading down to 76.09 ahead of the latest minor bounce. A bullish outside day formation on Tuesday could set the stage for a bit of a bounce over the coming sessions, but ultimately, given this latest break to fresh 2014 lows, the market is expected to be very well offered into rallies, with the 20-day moving average currently at 78.20 seen as a formidable resistance point in favor of bearish resumption. Back below the recent low at 76.09 will open the door for a downside extension towards 72.85, which guards against the major psychological barrier at 70 further down. SPX 500. The S&P 500 finally triggered a double top formation on Tuesday, with the market breaking down below the neckline at 2049 and opening the door for deeper setbacks over the coming sessions. But the market will need to establish a daily close below 2049 to convince of the onset of a legitimate correction, and inability to do so will keep the market focused on the top side, with a potential bullish resumption above the recent highs at 2080 and towards 2100 further up. Gold. Gold has continued to mount a significant recovery off of the recent multi-year low at 1131, with the market most recently breaking above the previous spike high from the 1st of October at 1221 and rallying all the way back up above 1230. Again, the overall structure still remains quite bearish, with a break back above 1256. That's the high that we saw on the 21st of October, required to take the immediate pressure off the downside and force a shift in the structure. Inability to take out 1256 will keep the market thinking about the downside and a potential retest of 1131. That's all for today, and see you back on again tomorrow.